Welcome everyone to Vested Interest. This is Shane back again from the stock pick of the day. Today it is Tuesday, June 27th. Quickly exiting June and entering July. Hopefully you have plans coming up for the 4th of July weekend. I know I'm going to have some people over and fire off some fireworks here at the house on Sunday, and then probably just hang out with the family on the actual 4th of July here. And today we are going to take a look at VICI Properties. This is a REIT out of the real estate sector. Let's jump right in. I'm sure they are going to be having some fireworks at their properties this weekend for the 4th of July. Let's see what they're all about. VICI Properties Inc. VICI Properties Inc. is an S&P 500 experiential real estate investment trust that owns one of the largest portfolios of market-leading gaming, hospitality, and entertainment destinations, including Caesars Palace, Las Vegas, MGM Grand, and the Venetian Resort, Las Vegas, three of the most iconic entertainment facilities on the Las Vegas Strip. VICI Properties' geographically diverse portfolio consists of 49 gaming facilities across the United States and Canada, comprising of approximately 124 million square feet and features approximately 6,100 hotel rooms and more than 450 restaurants, bars, and nightclubs and sports books. So they are really in the entertainment industry, right? That is the properties that they own. If you want to know more about them, check them out, VICIproperties.com. That is VICIPROPERTIES.com. That is their homepage where I pulled this information from. Again, really around the hospitality, leisure, and entertainment industry. Those are the properties that they are really geared towards. Now, the reason we are taking a look at them down today, 0.99%, just under 1% there. We are talking about VICI Properties Inc., ticker VICI. Closed the day at $31.09. 52-week range as low as $29.29, as high as $35.69. So they are right up against or closer to their 52-week low than there are their 52-week high, though there's not a big spread between the two, really. They've kind of been, looks like they've been range bound here between that $29 to $35 range for a while, or at least for the last year. Average volume 4.7 million. Today's was 4.7 or 4.77. Today's was 4.739, and you can see pretty volatile overall throughout the day. Big drop in the morning, recovery there, and then a big drop towards the end of the day. Market cap at 31.222 billion. A beta of 0.96, so they are a little less volatile than the overall market. PE is elevated, but with REITs, you really want to look at funds from operations. Price to earnings ratio is not a good one to take a look at, but it is $21.59 per share. Earnings per share, EPS, is at $1.44. That's a little on the low side compared to some of the other ones that we see, but not bad for a REIT. Earnings date, July 25th through the 31st. Look for it somewhere in there. Forward dividend is $1.56 paid out. I believe they're a quarterly payer. We'll see that here in a little bit. They have a very nice dividend yield, 4.97%. Obviously, if you could get them to pull back a little closer to this 52-week low or even set a new 52-week low, that would be a higher dividend yield, but that's a pretty nice payout right there. Ex-dividend date is June 21st, and so we just passed their ex-dividend date. You would not be in line for the next dividend, and they're going to pay that next dividend in July 6th. One-year target estimate, at least according to Yahoo Finance, looks like they're expecting them to set a new all-time 52-week high at $37.88. So it speaks to some upside potential appreciation for the stock price. I like to jump into statistics, look at dividend yield theory to see if we are seeing some value here. So we run over here under statistics. You'll go down to dividend splits. You'll find their 5-year dividend average, 4.66. You compare it to their current, right, 4.97, or forward, same thing. 4.66 compared to 4.97. What you're looking for is a higher dividend yield. That speaks to some potential undervaluation. So with 4.97 being higher than their 5-year average, according to dividend yield theory, they are potentially undervalued. They do have an elevated payout ratio, 106.25%, but I've mentioned this before on this channel. That is not real concerning with REITs. REITs must pay out 90% or more of their free cash flow to get special tax treatment as REITs. So as long as this wasn't sustained above 100% for, let's say 3 or 4 quarters, I would not be real concerned with this. It would be something to watch. Obviously, anytime you get an elevated payout ratio, you want to watch that and make sure that the company's healthy, good revenues, they're paying down debt, they're not overladen with debt. But for REITs, it's not as much of a concern because, like I said, according to the law, they have to pay out at least 90% of their free cash flow. So let's look at free cash flow because we want growing free cash flow over time so that we can have growing dividends over time. 2019, they had 679 million. 2020, it jumped up to 880 million. 2021, 893. 2022, up to 1.9 billion. And that is nice, steady free cash flow growth over time. That is really what you want to see, right? A nice, steady step up every year, not big jumps up or big jumps down. Very nice steady growth. And just a little bonus here, they are buying back their own shares, which is nice to see with REITs, because typically what REITs do to raise capital is they dilute shareholders and issue more shares over time. And this is one of the few that I've seen that is actually buying back shares. Now, it's not buying back a lot, but it is buying back shares, which is nice to see. And again, all brought to you by Yahoo Finance, now affiliated, just one of the sites that I like to look at. And I always recommend more than one source of information so that you can back check the information you are getting is accurate. And another one I like is stockanalysis.com. And according to the 8 stock analysts they've had take a look at this, they call it a consensus buy. I don't know enough about this one to really look at it, but so far all the numbers look good. Free cash flow looks good. Nice dividend payout rate, dividend yield theory says it's buy, so I would kind of agree with them here. Their low estimate is $32. It currently sits under their lowest estimate, so if it came back up to their low of $32, that would be a 2.93% increase in stock price. Their average estimate is $37 per share. That would be a 19.01% increase. And if it happened to hit their high of $41 per share, that would be a 31.88% increase in the stock price. All the while, you could collect that nearly 5% dividend yield. So looks like overall the numbers look pretty good. You can find a lot of the same information on stockanalysis.com. Financials, you'll find their balance sheet, their income statement. Under statistics, I like to look at ROE and ROIC, return on equity, and return on invested capital. Now, I like 10% or better for both of these numbers, or in line with their industry average. For REITs, this is actually pretty good. It's not the 10% I look for, but it is decent. 6.3% return on equity, 3.9% return on invested capital. That's a little lower than I like to see, but not terrible compared to their industry average for REITs and real estate, right? So again, so far, all the numbers here for VICI look pretty good. I am not a huge fan of their kind of single source industry. That's the only thing I would say. They are in the hospitality and leisure, and gaming sector. So if you were to have something like, a COVID or a recession or something like that hits those sectors hard, they could get hit pretty hard because they don't have any other businesses that really offset those losses. So this one here, you'd have to be looking for something specifically in this space. But so far, like I said, all the numbers really look pretty good. Let's go over and look at their dividends, right? We all want growing dividends over time. Let's see if they are doing that. And as we saw, 106.12% payout ratio. Again, I'm not going to belabor that point. It's not a huge issue with REITs. They have to pay 90% or more. So this, just watch it. If it remained over 100% for a few quarters in a row, a year in a row, then you might want to do a little bit digger deeping and see what's going on. Dig a little deeper, and see what's going on. But I went all the way back to 2021. They were in March of 2021. They were paying 33 cents. They raised it up to 36 cents in September of 2021. They kept it at 36 cents. So June of 2022, raised it up again in September to 39 cents. And it looks like you probably, if they're on this timeline, looks like they raise in September typically. So you might look to expect another dividend raised if they're going to keep this 8.33% dividend growth going. You look for that in September. So again, 8.33% dividend growth. All the numbers so far, that's decent dividend growth. That's really nice for a REIT, actually. So very nice dividend yield. Dividend yield theory says they're potentially undervalued. Free cash flow is growing. Forecast looks good. ROE, ROIC, not terrible. Not the greatest, but not terrible either compared to their sector. Growing dividend over time. So the only thing that like I said, the only negative I could really find with this one here is that they are kind of pigeonholed into one particular sector there of the real estate sector, where they're in gaming and hospitality and leisure. But other than that, all the numbers look really good. If you were interested in this one, might be a good one to throw on the watch list. See if they continue to pull close to that 52-week low, or even now the numbers look pretty good. This is my stock screener here. You can pause this, go through this, and this is how I set up the videos as well. So that's why I'm looking, understand the business, growing free cash flow, growing dividend payout ratio of 75% or less, check valuation based on dividend yield theory, buy below current cost basis or within 15% of 52-week low. You'd have to do the math. I believe this one is within 15% of its 52-week low. Return on invested capital, return on equity equal to or greater than the industry average. Again, that's where I get that 10% or plus, or equal to its industry average. So it's pretty close there on this one. And for financial companies, I throw in price to book, which near 1 or lower is what I'm looking for there. Right? Must meet 4 of 7, or if it's a financial company, 5 of 8. That is really it for this one. Again, VICI Properties does look pretty interesting if you are looking for something in the gambling, hospitality, leisure space. This one might be worth taking a look at. It's not in my portfolio, to be completely honest, but I know that there are some people that really like this one. This one was suggested by a subscriber, so really appreciate the suggestion. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a like-minded dividend growth community here where we can share our experiences, share the stocks we're watching, stocks like this one, suggestions for stocks we're holding in our portfolios, or stocks that we're avoiding and stocks that we're selling out of because they no longer meet our criteria. Go ahead and share that all down below in the comment section and let me know what you think of VICI. Are there other REITs that you like better? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.